Good morning, everyone. This is Nadex Morning Analysis, and it is Friday, January 15th. My name is Todd Rich. I'm with Nadex. With me this morning is Brian Caprice from Keep Trading Simple. Before Brian and I talk about some things to look at this morning in the markets, as well as start thinking about Sunday night, I need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. With that, I think the way we're going to start off today, we had our retail sales numbers. It's impacting U.S. equities, and not in a good way, but I thought that might be a good place for us to start this morning. So, Brian, you want to start us off with that?
Sure. Yeah. So expectations today were, and again, if you guys can see over here, it's lighting up because obviously the cursor is missing once again. Anyway, the expectations for core retail sales was supposed to be negative 0.1. So basically nothing, more or less flat. Came in at negative 1.4%, which is, again, not necessarily what the market was preparing. Retail sales were supposed to come absolutely flat at 0.0, came in at negative 0.7%. So not necessarily the best sales figures. As you guys know, and I've mentioned before, retail sales is one of the, I guess, biggest leading indicators, because when we don't have sales, it's really hard for companies to be able to make money, show profits. And again, you guys know how, we have a negative earnings cycle. It's not really great for the overall economy. So at least for the markets, not the economy, for things here.
Right.
But again, what we've seen is, those negative numbers are not necessarily the best. And one thing at the very, very end, remind me when you say, if you ask me if I have anything else, I do have something else that I want to talk about that comes out at 10 o'clock today. So don't let me forget that one. But going across and looking at the Dow in particular, you can see that, this is a 30-minute chart, smaller time frame, but the Dow actually pulled back. And we had these highs, and we talked about breaking out yesterday. And the reason why we were talking about breaking out was because of the Biden stimulus. And originally, earlier in the week was a multi-trillion-dollar package. Now it's turned into a 1.9. So I feel that there was a little bit of a disappointment there. And then we had Powell speaking yesterday at 12:30, and it was like, you guys remember like Charlie Brown and Peanuts and all those things when the teacher or the mom or the teacher where he goes wah 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 wah. That's basically what Powell did yesterday. Powell really said nothing of substance. I think that the overall we're expecting a lot more out of him. I don't know if it's the administration change or just the uncertainty with COVID. It didn't really give us the typical, and again, those two type of events yesterday, I think, left the markets in a bit of disappointment. And again, we never saw anything break higher. We actually saw it roll over and kind of actually push back down again. And then today, this is a 30-minute chart. You can see there's a little bit of a setup here. Easy pullback, right? An impulse correction at the white line. I forgot. You guys can't see the cursor. Right there. It's close. It's close. I'm actually at the bottom of my screen. Anyway, one thing I do want to point out is you have this area over here. I'll change it to yellow so it's easy for everybody to see. You can see right here, this area, we had quite a large emotional kind of burst forward coming up from that 33.89. Again, two candles straight up, we're talking about coming from what? 3,300 to like 3,800. So 500 points in 2 hours is a lot. The area we're kind of approaching right now, and again, I'm showing that we're approximately at 38.11 right now. This is an area where buyers have stepped in. So, I'm going to move the yellow and use that as my cursor over here. But you guys can see this area right here. We had a couple different bottoms. And again, buyers stepped in higher, buyers stepped in again. And we've seen that. We've seen them step in here. We've seen them step in here. We've seen them bounce once. But at this point, the fact that we're hitting the same area for about the fourth time, and this is as low as the buyers have let it get in the past already, you can see we're kind of skirting along this line. So with negative retail sales, there'll obviously be a reaction off of the open, but void of any really positive news today. Again, seeing less earnings, especially in December, is not necessarily the best thing for the overall economy. Coupled with a disappointing stimulus package, and then really Powell not really saying much of what we thought. There could be a potential short in here today. Pushing to the downside, and looking at this again, the 1 to 3 is in a great location, and the 1 to 5 is maybe a little bit farther than we would like. But again, all signs right now are looking like it wants to push to the downside.
All right, let's jump over to the Nadex platform with that. And there's one really important thing you said there that I think people really need to hear. And it was a throwaway sentence for you, but that the market and the economy are not the same thing. And I think
Yeah.
everyone needs to wake up to that. The economy is
Mhm.
one thing, the markets can do something entirely different. And if someone sees the markets going up or the markets going down, does not mean the economy is doing better or the economy is doing worse.
Mhm.
The economy is the economy, and there's facts around numbers. The market, there's a lot of emotional sentiment in there, and then there are some other things that can go on in the background to uh, disjoin what's happening in the economy from what's happening in
Mhm.
prices in the market, particularly when you mentioned Powell and the Fed, who has perpetually been on a buying spree. When they spend money, they can inflate the price of assets um, and draw a discord between what is actually happening in the economy in terms of profits, in terms of sales, in terms of employment, and then a very different world playing out in the price of assets. So
Mhm.
very important. I want everyone to really realize that. All right, now what you were talking about in the Dow, we are. I mean, we're seeing. We if I back this up, boy, can I even back it up even further? Let's drag myself over to try to even find that emotional, this emotional spike up. And this level that we've tested once we've blasted through, that was around 30,680 is where has been that level that you were pointing out with your yellow. And I'm going to now slide this chart back over and make this a little bit easier to read, where we've constantly tested this 30,680 level, which is where
Mhm.
we are right now. So the question
Mhm.
is, do we hold this level, or and based on what you see at the open, if we bounce off it, you might see it, bounce in a little bit of a range. I did draw some Fibonacci on here just to see what's gone on as of late, and we see that 50% retracement level, which is right here. That's this gray bar below 30,850. So for those folks, 30,850 seems to be where it has bounced. It finds some sellers, and now we're coming right back down to this 30,680 level. If we bounce off that, you might see a little bit of short-term price action for you to take some opportunity. These are the binary options that are over here that you could take a look at.
Mhm.
And if we start breaking through that level, though, and we start showing it finally gets through that 30,680, look out
Right.
below. Um, we might see it kind of fill that gap from that emotional gap from last week. So definitely something to be watching. The Dow today. Keep your eyes open and your head up and your eyes open.
Mhm.
Uh, I think that's a pretty good one. Now, the other thing I want to mention is Nadex. In fact, here while I'm on the platform, I'm going to bring this up. If you look in the updates section and you look at our hours for this week, the week of the 18th, next week, we are actually going to open at our regular time on Sunday night. All right, it's Sunday night. Now, it is a holiday on Monday. We will be closing at 11 a.m. Eastern in the morning. But the truth is, foreign exchange markets don't close. And we've got customers who want access to those foreign exchange markets. And so we will be open for the European hours. And in fact, I would be paying attention to that. I think for most of the holidays this year, if the foreign exchange markets are open, we want to have at least some partial day where people can access those FX markets because our customers want access to those markets. They're always open. And if something's happening, they want to be able to potentially do something. So we are going to open this Sunday, but we will at our normal time, 6 p.m. Eastern on Sunday. But with the holiday, it's an abbreviated day. We will be closing 11 a.m. Eastern in the morning. And with that, I thought maybe we should take a look at something in the
Mhm.
FX market. And
Sure.
I know, Brian, I think you were looking at the something with the
Yeah. There's
dollar. because retail
Oh,
sales.
yeah, Aussie. Yeah.
Yeah, let's do that.
Yeah. So basically, there's two that I want to highlight. These have been the two big movers and things that we've mentioned this week. Aussie dollar, we had a level, and we mentioned it multiple times this week, the 78.07 level. You guys can see it at the very, very top. Again, the cursor is going to be funky. Or was. I can get close. Got to look at a different screen. I'm nowhere close on my screen, but I can see it on the preview screen. This level up top here, the 78.07 level, we had a very emotional response. And from yesterday morning at the open, price literally shot straight up, and that was the response to the $1.9 trillion. The peak of this came in right around basically when Powell was getting ready to speak, right around that 12 o'clock mark, and we got super clean. Again, this is one of the things I love about Nadex the most. Once we get that acceptable level of risk, you can get in where, sometimes with, spot currency or futures, we're like, okay, it's got to be right up here, right? Nadex is about being close and making sure the reward matches. In this case, had you done this in the spot currency realm, you missed it by 2.5 pips. Very, very small time frame. But again, we were in the upper extreme of the curve. We knew we went on the get order on this one. And what it's done since that time is literally head straight down. Now, fast forward to where we are. And again, I'm not going to get the cursor down here based off the timing. So I'm going to use, I'm going to go ahead and draw like a little, I'm going to do a makeshift cursor. You guys should be able to see that little, that's going to be my cursor from now on, that little yellow dot. Anyway, you can see that price is over here right now, and we're approaching a level, and this level is right approximately at 77.10, 77.11 area. It is an area where we have seen a decent base, and then again, a nice little kind of springboard about 5-6 hours straight up off of it. So, with the U.S. market opening, with retail sales being negative, that's not something that strengthens the dollar. That tends to weaken the dollar when you do that. Again, this leads to kind of an interesting opportunity where we may be able to go, long right now, or sometime this morning at the open. Again, remember, we got to kind of stomach that first, 15 minutes of the open. But again, if this is where the turn is for the day, would not be surprised whatsoever. So again, 77.10 is the level right there. But one thing in addition to what you just said, I want to bring up is, looking at the curve, you can see top and bottom, at least on an hourly basis, these were two strong buy and sell levels that we were looking for. We're not quite there right now, and again, we may peter back and forth, but on Sunday night in particular, these are the two levels that I'm really looking for to see if we can get any movement close to them. Same thing if we do have a kind of a pull away, and if we do get the reversal here and come up, the 77.10 level would also be a level on Sunday night if we open or we push into it soon after the open. It would be an opportunity that I'd be looking to go long from. So again, just some interesting levels going into Sunday. There's a small trade in this one, I think, this morning, particularly with retail sales, and then again, some of the other numbers we have coming in at 10 today.
Excellent. Let me flip over to the Nadex platform quickly. Again, I'm looking at binary options here, and I like that we're teeing people up. Here we are at that 77.10 level, right in the middle. There are plenty of binary strikes for you to be able to play this. If you wanted to play it from a long side, trying to catch a quick little bounce, remember you buy it, and if you're right, you don't have to wait for it to settle. It can move in your favor, and you can always liquidate it for a partial profit, or you can always liquidate it for a partial loss as well if you're wrong. So even though the Nadex contracts are inherently defined risk, defined reward, you don't have to stick with those parameters once you enter a trade. You can get out of a position early by simply buying back one that you sold or selling one that you bought. So it's really important for people to understand that. Here's that 77 level where we are now, where Brian's thinking, all right, let's see what happens when the U.S. equities open and maybe we get a bounce and opportunity. But then for Sunday night, some other levels to be looking at. Up above, in case you can't see them, it's around 78.05. Around 78.05 are where sellers tend to step in up above. And then 76.50 where buyers tend to step in down below. So there's some levels you can see where actually there's a range right in here. You can actually see where down here was where the buyers stepped in, and up here is where the sellers stepped in. Definitely something to be looking at come Sunday night, depending upon what you see. It's something to help you, to give you an idea what to be looking at. All right, before we call it a day, Brian,
Todd, do me a favor, pop back over real quick from my screen. Guys, yes. And this is the other thing, it's important to point out why the Aussie is and again, why you may say, hey, these zones are a little bit farther apart. Here is the news from Sunday night. You guys will see there's one red news release, and it's China. You may say, We're not trading China. Yes, we are. When you trade the Aussie dollar, you are trading the Chinese market. Why? Because China gets most of its natural resources and things for production from Australia. Well, you have GDP on Sunday night at 9 p.m. Eastern Standard Time. The forecast is supposed to be 6.2%, where previously it was 4.9. So again, all this Chinese data on Sunday night, with not having a kind of a counterplay with the dollar, this could, again, this GDP number comes in better than expected, which again, it's Chinese data. I wouldn't be surprised if it comes in a little bit better than 6.2. That would be something that would strengthen the Australian dollar as well. So just keep that in mind. There is news that happens Sunday night because that is actually Monday morning in China.
Excellent.
And now let me go over to the last bit. Again, I wanted to talk about gold. So gold, we've talked about this 1860 level. You can see that gold has kind of rolled back over because lack of really, again, disappointing stimulus. Nothing that Powell said was really kind of earth shattering. And again, I just want to make sure you guys keep that focus of 1860, a break above. I'm not saying go long right now, but what I'm saying is when we do finally get break, and it will break eventually, that would be that kind of long side target. But right now, we're still maintaining that same sideways movement. What I was talking about, the additional news that I wanted to bring up to people was at 10 o'clock today, we have this preliminary University of Michigan inflation expectation. Oh, go ahead. Inflation expectation. It's supposed to come in at 2.5%. Now, you would say, well, 2.5% is great, right? This is actually the percentage that consumers expect for the price of goods and services to change in the next 12 months. So this is what the expectation is for you and I, right? Well, if we go back to the actual data for what we're seeing, that is CPI. We're seeing that inflation is much, much lower than that. It's coming in at 0, 0.2, 0.4, maybe 0.6 back in August, but you can see that it dropped out pretty fast here. So it's interesting to see that there is a big disconnect between the two. And again, that's another reason the consumer says, we're getting inflation. The data shows us the exact opposite, and the market shows the exact opposite. So again, that's why we keep rolling to the downside.
Yep.
All right. Jen.
So that. Good morning, Jen.
Yeah, she
all right. I know we went a little long today, but that was because we wanted to set you up for Sunday night. Again, today we talked about the Dow looking, being aware of the downside if the sell-off continues. We gave you some ideas in the Aussie US dollar. We're at 77.10, looking for maybe a bounce today, but then for Sunday night, be aware 78.05 above and 76.50 below. Gold, keep an eye on that. If we start seeing some real inflation, you might see some buyers stepping into gold at some point. Brian and I will not be on Monday morning, but we will be back Tuesday morning. So we'll catch you next Tuesday. And then that is also a reminder that next Tuesday we have the New Year, New You Better Trader event at Nadex. If you haven't registered for it, go to the Nadex website and register for that. It is a 6-hour day of free education. We will record all of it, but it's a great opportunity for you to fine-tune some of your skills on technical analysis, fundamental analysis, trader psychology. So there's building a trading plan. There's going to be something for everyone. All right. If you have any questions for Nadex, please email us, customerservice@nadex.com. We are accessible. We're here to help you. As is Brian. You can email him at support@keeptradingsimple.com. And I always like to mention our Trust Pilot. If you could go to trustpilot.com/review/nadex.com and give us a review, it would be greatly appreciated. With that, thank you very much. I want to give everyone a chance to get a fresh cup of coffee before the U.S. equity open in 10 minutes. And we'll catch you Tuesday. Good luck in the markets, everyone.